Hey everyone, thank you for joining us today for our webinar with Orr Reno. I'm Emily Marsh from the Greater Concord Chamber of Commerce. I just want to let you know if you have additional questions about the COVID crisis and need additional resources right now, the Chamber's website is a great place for you to look for information. You can go to concordnhchamber.com. From our homepage, there's a quick link to our COVID page where you can visit our blog, see tons of information, as well as view recorded webinars that we've hosted previously, including a couple with Orr Reno. So just some housekeeping really quick. If you have questions during this event, you're going to want to submit them through Zoom's Q&A portal. So if you move your mouse or tap your screen, you're going to see a button that says Q&A, and from there you're just literally going to type in your question. Those questions will be viewed only by me and our presenters, and we will try to get to all of the questions that are submitted. In the past, we've had a lot of questions, which has been fantastic. And it's great to see you guys so engaged, but it is hard to get to all of them. So we will do our best to do that. So I'd also just like to thank Orr Reno for partnering with us on this series. We're going to be producing webinars on a weekly basis on Tuesdays at 10 a.m. We're not releasing the topics yet because we're choosing the topics based on our members' needs right now. So they're very, very timely. They have to do with issues that people are dealing with right now. So I would recommend you subscribe to the Chamber's email list, which you can do from our website, concordnhchamber.com, so you can get the latest news about these webinars with Orr Reno. Thank you so much for them supporting us and sponsoring this series. We really, really appreciate it. The support as well as providing this great info. So without further ado, I'm going to hand it over to Lisa and Jonathan.
Good morning, everyone. Those of you who are often quarantined like us, we can relate. So to the extent there's any glitches during the course of this presentation, we will hopefully get everything back on track quickly, such as children, dogs, whatnot, running through. What you've got in front of you is a little slide deck that we put together to help organize this topic. And we're going to start, let's see if I can make this work, on what we'll cover. Jonathan and I are going to be tag teaming this, switching back and forth on topics. So hopefully this will go smoothly, but the general overview of what we're hoping to cover with you this morning is first a high-level explanation of what business interruption insurance is, just so you can identify whether you might have it in your own stack of policies, how to determine within your policy coverage forms if this coverage exists, basically. Will it cover COVID-19? I know that is what's on many of your minds, and we will take a dive into the analysis that's being put out there, both by the insurance industry and policyholders, which are challenging coverage here. And the subtopics under that are whether COVID-19 related business interruption is a covered loss under a business interruption policy. The covered loss language is a term of art, and Jonathan will give us more information on that. Then I'm sure you've heard of the fact that most policies these days have a virus and bacteria exclusion in them. I'll take a deeper dive into what the language of that exclusion looks like and whether it might be contained in your policy. And then we're going to turn to whether civil authority coverage might provide some level of coverage here, even if there is a virus and bacteria exclusion. And then finally, if you choose to challenge a claim denial by, let's say you've submitted a claim for business interruption and you want to pursue coverage, we'll give you some information on how to pursue a claim against your insurer. So that's the overview. Let's dive in first with what is business interruption insurance. First off, it's coverage that about 30% of US businesses have in place. What it is designed to cover is the income you lose as a result of a covered loss. And again, we'll look at more what the term covered loss means. It's usually traditionally thought of as coverage that's triggered by a disaster, like a fire destroys your business, or a snow load causes your roof to collapse and you have to cease operations for a period of time. The key to what triggers it is the wording of the policy. And you're going to hear that more than once today because policies are a little different. Different insurers word things slightly differently. Some language is more standard form and is approved by the regulators here in New Hampshire, the insurance department. So you have to sometimes also look to see if there's a particular New Hampshire endorsement in your policy that explains how coverage is triggered. And business interruption insurance is also typically triggered if the government authority, whether that's usually a municipality like the building inspector, closes your business because there's been some kind of a catastrophe, fire, snow load loss, that kind of thing, and they have condemned the building until repairs are done. That's, sort of the traditional application of a government action coverage, but we're going to look more specifically as to whether the executive orders closing businesses might be a trigger for this coverage. Business interruption insurance is not something that's sold as a standalone policy, like you go out and buy an auto policy to cover your car. It would be, the business interruption coverage would be part of a property and casualty policy. And by property and casualty policy, I mean one that covers damage to your business property. And the casualty side of that is coverage for third-party claims if someone's injured on your property, that sort of thing. And obviously there's other types of coverages that fit into those broad categories. So business interruption comes as part of that package. It may be part of a comprehensive package that your broker has sold to you for a business owner, so that it is just part of the offering from a particular carrier, or it can be purchased as a separate rider onto what otherwise is a bare bones policy. So when you're looking through your stack of what you got from your broker, look for a form that says that it covers business income or business interruption. The forms as a whole, though, even though they're separate coverages for business interruption or property damage or liability coverage, they typically are read together as a whole, so that the terms that are defined in your base coverage also carry through to what triggers your business interruption coverage. So it's one of those things where it's like follow the numbers, draw the line as you read these forms together. I'll also add in this kind of overview that some business interruption will cover a partial interruption in business, while other policies will only cover a complete interruption in business. That's relevant for those of you who have been partially shut down. For example, a restaurant that can still provide takeout service, but can't have people in the dining room, may have a partial interruption claim. So you'll want to look to see if you've got the kind of coverage that would trigger if there's a partial interruption. I also want to point out here that some policies are what they call all risk policies. That means that the policy will cover all types of risks that aren't otherwise excluded. So all direct physical loss or damage to your business property not otherwise excluded. There's another type of more narrow policy that covers only a specific type of loss. Traditionally, you could purchase a fire policy, and there's a statute in New Hampshire that governs fire policies for people who are purely trying to protect their business property from a fire loss. If you had that type of policy, only the type of peril covered by the policy would trigger a business interruption. So I doubt very seriously any of you have purchased a general pandemic policy that would cover something like this. So it's more a question of whether you have a very narrow policy or you have an all-risk policy that requires more analysis to determine if you might have coverage. So that's really what I'll call the high-level overview of what's going on here. So as we said a few minutes ago, policies are made up of a series of standard coverage forms. You'll see, a reference at the bottom of your policy that, the first package might be page 1 of 12, and then there's 12 pages that describe a coverage. And then there's another form that talks about either a different aspect of coverage or maybe exclusions. And that might be a form with 6 pages, and they all have little code numbers on the bottom. Those code numbers generally refer to standard forms created for the insurance industry by 2 large service organizations. One is known as ISO, the Insurance Services Office, Inc., and AAIS, the American Association of Insurance Services. And you may see on your policy forms an ISO code or an AAIS code. These organizations look across all the claims that are filed in the United States to look for trends on types of risk, and will come up with policy language to either address something that's happening in the case law. They very much are tied to interpretation by courts around the country, and they might be trying to clear up something that courts have determined is ambiguous, or there might be risks that they're trying to address. And these forms have to all be submitted to the individual state insurance regulators, because insurance is regulated at the state level, not the federal level in this country. The New Hampshire Insurance Department has to approve language that's offered in policies sold in New Hampshire. If the New Hampshire Insurance Department doesn't like the wording of a standard form, it may require some kind of tweak to the language or forbid that an exclusion occur in New Hampshire or something along those lines. So rather than create separate forms, sometimes what the insurance companies will do is provide you with their standard language and then the New Hampshire endorsement, which modifies the standard language. So it can be confusing, but you start with the standard form, and then you look to see if New Hampshire has altered it at all when determining if there's coverage. Why I'm giving you this level of background is that there's a policy argument I'm going to discuss in a few minutes as to whether exclusions to policies might be enforceable or could be challenged as unenforceable because of representations made by ISO and AAIS to the regulators, when in particular the virus and bacteria exclusion was presented to them as new policy language for approval. So here's the steps that you need to apply, and then we'll get down to the COVID questions. First, is the risk that you're talking about here, COVID-19, generally covered by your policy? Second, is it excluded by any terms of the policy? And third, are there any what I'll call buybacks or exceptions to the exclusions in your policy? Because quite frankly, it is possible, and you may have done this depending on your foresight and what your brokers provided as options for you. You might have bought back coverage that essentially negates the exclusions in some respects. And that can be very, very important to take a look at to see if, even if your policy has something like the virus exclusion in it, did you buy back something that would provide coverage? And with that, we're going to look at if BII insurance is triggered, how much does it cover? So let's say we've determined, or you've determined, that we think the business interruption insurance will apply in your case. What do you get? What is it worth it to even fight about this? Typically, what the policy covers will be stated in a declaration as to whether there's a limit. Typically there is, and it will be based on the income of your business. It might be a $50,000 limit. It might be $1 million limit. it's going to be scaled to your business most likely. And the amount of premium you pay will be tagged off of the limits that you have. The types of things that this coverage will provide you is essentially replacement for the profits, some net profits that you would have realized. So they're obviously not going to provide you payment for the cost of goods that you didn't have to buy for your production, but the anticipated profit based on your financial records from the last year or something that would be covered. Fixed costs that you, under contracts that you can't get out of, those are covered. If you need to move to a temporary location to set up your business, that would be covered. Training costs, if you need to retrain staff upon resumption of business because there's new machinery in place that had, for example, that had to be replaced because of your loss, or because you're in a temporary location with different machinery, that can be covered. Many of these policies have extra expense coverage, which is reasonable expenses to allow you to resume. Might be, for example, computer costs, other types of add-on costs that you need to get yourself up and running. Civil authority ingress egress coverage, that's if the government mandates closures, and I know that is something that we're going to be talking about in more detail here. Typically, this coverage would trigger if there's a curfew imposed that affects your hours of operations. Let's say that there's a curfew that everyone has to be off the streets by 6 p.m., but your business typically stays open to 9 p.m., so you're losing 3 hours of your business operation. That might trigger payment of your employees' wages, taxes, like your property taxes, and loan payments that you need to be making. Those are the types of things that business interruption insurance will cover. So obviously, for a business that's down, this is very important coverage if we can figure out how to make it work during this COVID crisis. How long does it cover? The policy, again, will tell you. A typical policy is for a year. You might have longer period of business interruption depending on your type of business, might be less. It's all going to be tied to the premium as to how long that the coverage will last for. You can't just dawdle along and collect insurance payments, however. You need to make diligent efforts to restore your business operation for this coverage to apply. And even if you have a year's worth of coverage, if you get your business up and running in 6 months, the coverage will terminate at that point. So I think that's a fairly obvious point. So let me turn the mic over to Jonathan and look at more closely whether COVID-19 triggers coverage.
Thanks, Lisa. So I think the interesting thing, the fundamental issue here really is it kind of begins with an analysis of whether there's been a direct physical loss. And in the normal circumstances, that would be something like you show up to your premises and you discover that overnight a pipe burst and there's water damage all over the floor. That would clearly be a direct physical loss. Another would be the example Lisa gave of the fire scenario. That's plainly a direct physical loss. These are kind of uncharted waters we're in, and this pandemic is really unprecedented in many ways, at least for recent history. And the insurance industry has largely taken the view that coronavirus and COVID-19 does not constitute a direct physical loss that triggers the business interruption insurance coverage. We're going to cover that covered cause of loss and direct physical loss inquiry. We'll also talk about the virus exclusions and then the civil authority coverage and some of the arguments that have been raised by the insurance industry, including in answers to recently filed litigation, arguing that there is no coverage under these business interruption insurance, under business interruption insurance. As the current slide notes, there are some interesting test cases that have been filed. There are several. There's one involving a dental practice in Illinois. That's pending. I think it's in federal court in Illinois. It might be in state court. There's the Oceana Grill in New Orleans, and there is an upscale restaurant in California. that have been the subject of declaratory judgment actions filed relative to business interruption insurance, and asserting that the coronavirus situation is indeed that it has a direct physical loss to it that leads to coverage. Those suits are in their infant stages, and we don't have any guidance from the courts in any of those cases, but answers will be forthcoming. In terms of the direct physical loss to property issue, that's something that the New Hampshire Supreme Court dealt with a couple of years ago, not too long ago, in the context of a cat urine smell in an apartment complex. And interestingly, the New Hampshire Supreme Court determined that cat urine, which was permeating the entire complex, did constitute a direct physical loss. In other jurisdictions, again, so outside of New Hampshire, a direct physical loss has been found from such things as the smell of ammonia in a facility, gasoline and vapors that were permeating throughout a church, toxic gases that were being released from drywall inside a home, and then a pervasive odor from a meth lab that had infiltrated a house. So those are instances where that direct physical loss requirement was met. These circumstances are potentially different. We don't have, in some instances, I suppose there would be an incidence of coronavirus being an individual having it, and there being good reason to believe that contamination of the physical premises has happened. But for much of us, we're operating under a concern about spreading coronavirus and contracting it, and so there isn't an obvious known presence of coronavirus in the environment that's actually causing the physical loss. It's more of a kind of hypothetical loss, and so that's what's creating a lot of questions in the direct physical loss analysis.
Okay.
That raises, we're on slide 13, the idea of whether the fear of contamination, is enough to trigger the coverage. The governor has issued the emergency orders that have issued in order to prevent the spread of the virus and to prevent it from becoming a direct physical loss. But, query whether the loss, whether that proactive measure to prevent the spread is a means of constituting a physical loss. I mean, the physical loss hasn't resulted, it's anticipated. The CDC has issued certain guidance on what it thinks about the presumption that we should believe that people have contracted coronavirus, and that it can be transmitted to surfaces and metal objects, and that one can contract COVID-19 by virtue of that contact. So there is that strong presumption of contamination, but largely we aren't going to public spaces and using parks and dining in restaurants because of the conceptual fear of contamination as opposed to the actual fear. And that gives a basis for asserting that there hasn't actually been a direct physical loss. We can flip to the next slide. In looking at this context from the restaurant scenario, I think it's a good means of looking at this, because on the one hand, there is a physical loss of the dine-in seating. In New Hampshire, patrons of restaurants are not allowed to eat as they traditionally would in restaurants under the governor's current emergency orders. However, takeout is permitted. So, on the one hand, if you have takeout that's allowed, then it would seem to suggest that there hasn't been any contamination of the restaurant if it's deemed, clean enough and uncontaminated in the sense that food can be prepared there and served to customers. On the other hand, there is this presumption of contamination, and certainly fear and worry about it, and therefore the dining room seating and the in-premises seats have been removed, and and lost. So, there's kind of two ways of looking at that, and it'll be interesting to see how the courts handle that matter, because the scenario is different in some ways from a flood of water filling a restaurant and making it impossible for the premises to be used. I mean, obviously, food is still being prepared in restaurants. On the other hand, there are significant losses that have occurred, and including the loss of that physical space. I think we're on the next slide, Lisa.
Okay. So let's switch topic here. I guess sort of summing up where we're leaving off with the direct physical loss is that the New Hampshire Supreme Court has provided maybe some hope that there could be a determination of direct physical loss, given that it has expressly determined that an odor can constitute direct physical loss. Here, can you establish a presumption of contamination? Maybe you had an employee who actually was tested positive, so that you could argue maybe even more strongly that there's a presumption of contamination of the space. So that I think the question is out, and it at least warrants maybe a claim being made, and not giving up by assuming, well, we don't know. We don't know yet what the New Hampshire Supreme Court's going to do, but at least the CAT case provides maybe some hope that our jurisdiction might be a little more on the lenient side on this topic. But let's look at the fact that even if there's a direct physical loss, many policies have coverage excluded by a particular coverage form for virus and bacteria, and a form. And this came out of the SARS epidemic in the early 2000s, which caused the insurance industry to develop a coverage exclusion. In the past, they had focused on mold and rot kind of exclusions and pollutants, with the Superfund contamination cases that happened in the 70s. And then SARS came along in the early 2000s, and that got everyone thinking about pandemic exposure. So AAIS, and I don't know if you can read this on your computer screens, it may be pretty tiny, but what I've put up here is the AAIS standard form that developed in 2006 for virus and bacteria exclusion, and it's worded very broadly. It states that it applies to all coverages, coverage extension, supplemental coverage, optional coverage, and endorsements. That's pretty broad. And if you look down a little farther, under paragraph 1 there, it states that we do not pay for loss, cost, or expense caused by, resulting from, or relating to any virus, and then bacterium or other microorganism that causes disease, illness, or physical distress, or that is capable of causing disease, illness, or physical distress. This exclusion applies to, but is not limited to, any loss, cost, or expense or result of any contamination by any virus, or any denial of access to property because of any virus. Now, you read that and you go, whoa, that seems to be game over for my potential claim here, even if we get past the direct physical loss issue. And the similarly worded ISO form under, you might see either of these or both of these in your policy, depending on how your package of policies is put together. But this one provides to commercial property coverage. It expressly states under paragraph A that it that it applies to endorsements that cover business income, extra expense, or action of civil authority. And it, in paragraph B, states that we will not pay for loss or damage caused by or resulting from any virus, bacterium, or other microorganism that induces or is capable of inducing physical distress, illness, or disease. So similarly, a very broadly worded exclusion in this, this endorsement, which changes the overall coverage for direct physical loss. So you say, what about that? If I haven't bought back coverage for virus or bacteria because I thought ahead and it was offered to me, is there any argument that could be advanced to challenge this exclusion in my policy? And in a minute, I'll talk about the legislation you may have seen in the headlines that some states are introducing to try and require coverage. But there is a policy argument that's being advanced by plaintiff groups, and it's based on the information provided by ISO and AAIS to the regulators back in 2006 when they introduced this endorsement for approval. And the representation that were, I guess I should say representations, because each made a separate one. I've highlighted here on this slide that says, while property policies have not been a source of recovery for losses involving contamination by disease-causing agents, it goes on to state that, well, because this specter of a pandemic could create claims, we want to get out ahead of it and put this endorsement in that clarifies that coverage isn't intended for pandemic-related claims. And then AAIS filed a memorandum that stated pretty much the same thing. Property policies have not been nor are they intended to be a source of recovery for loss, cost, or expense caused by disease-causing agents. Okay, so what? Well, at least as this policy argument goes, prior to 2006, courts had found coverage under property policies for contamination by E. coli, radioactive particles, noxious air particles, lead, asbestos, mold, mildew, health-threatening organisms, etc., as I've listed on this slide. This is creating an argument that the insurance industry organizations, AIS and ISO, misrepresented the state of the law to the regulators. But can't, is it a problem for them to change the policies and limit coverage? Not necessarily, but the effect of telling the regulators that this coverage has not been available and that they are not reducing coverage by this endorsement means that the regulators wouldn't have required the insurance companies to reduce allowable premium amounts. When a coverage is limited or narrowed, the regulators require a reduction in premium. So has this ever happened before? Yes. There have been cases in the past where this same type of public policy argument was raised based on arguable misrepresentations made to regulators, and coverage and exclusions like this have not been enforced by courts. This has been done in the environmental context in particular. So this argument is being floated, as a counterpoint to the insurance industry's, statements that are being made that coverage just is not going to exist under business interruption because of the virus exclusion. The argument is being developed now that this position may be challenged on a public policy basis. This is something that's going to be tested in lawsuits. I can't give you a definitive up or down because it's going to depend on what the regulators knew. Did they know about this coverage being found by courts? I think, to say that a misrepresentation influenced regulators, you'd have to prove actual misrepresentation. So I'm not sure where that's coming out, but I want to throw that out there as a possible argument if you were to determine you needed to challenge this coverage and your policy had a virus exclusion in it. But policies sometimes also cover closures by civil authorities. Might that, despite this virus exclusion, provide coverage? Let me turn this back over to Jonathan to respond to that.
I'll get there in just a second, but I think I need to emphasize this. Courts have not yet considered whether viruses or pandemics constitute a physical loss. So again, bear in mind, there are all of these cases that have recently been filed and are pending in various jurisdictions across the country, where courts have been asked to agree that the physical loss did not require structural damage or a physical intrusion, but rather could include airborne contaminants and specifically coronavirus, because of the fact that coronavirus has such a high likelihood of making people ill. So that's the unresolved question that we're all kind of waiting with bated breath for the answer to, and it really bears repeating. I know Lisa said this, but all of this depends on your business's specific policy language and provisions, and the precise verbiage that is utilized. And it also depends on the specific factual circumstances, because the governor's orders, there is some variety from one industry to another. And certainly this in New Hampshire affects restaurants in a different way than it would affect other businesses. And so the facts will really drive the analysis a great deal as well. And before I address the civil authority exception or coverage issue, I want to get into the fact that one also needs to have in mind the policy limits that apply for the business interruption insurance. And, the losses here in some instances will be significant. And so it's, I think, an important part of the analysis to consider what type of coverage and policy limits are available to the policyholder, so that they can have that in mind as they consider their coverage here. On the government action, civil authority coverage analysis, it's usually triggered when it's taken in response to dangerous physical conditions resulting from the damage or continuation of the covered cause of loss that caused the damage. So some of the language that I seize onto there is the phrase resulting from the damages, and also the phrase dangerous physical conditions. And so again, this analysis is not too dissimilar from the analysis for the covered cause of loss and the physical component that we talked about moments ago. And I think, there could be concern about and a question about whether the possibility of the virus being in the air or being transmitted from a sneeze and potentially getting on a surface, whether that prospect constitutes damage. Again, the specific word is the phrase was resulting from the damages. So query whether the fear of contamination of the air or surfaces is enough to be damage, and whether it is enough to be something that is deemed to be a dangerous physical condition that has actually arisen. The government action, I think the argument the insurance industry is likely to make is that government action has been instead taken to reduce the virus outbreak, not because of an actual realized danger that is being responded to, but rather a feared, contemplated, and I think I would argue probably even likely threat. So is that proactive measure? Does that circumvent the coverage under the specific language that is utilized in the provisions in the policy? That's going to be the question. I think it's interesting to note that courts in the past, when they've dealt with the issue of evacuation and the threat of damage, they have there's been a split. I'm not sure, we haven't examined every jurisdiction in the country, but there seems to be a split about the requirements for the direct physical loss occurring at the premises. In Georgia, there was a case where an evacuation in anticipation of a hurricane was deemed to be a covered cause of loss and was within the ambit of the government authority coverage. Meanwhile, in Texas, the opposite conclusion was reached, where there was a threat of damage that was deemed to not meet the requirements for a direct physical loss, and therefore the civil authority coverage didn't apply. So it's again, it remains to be seen how our jurisdiction and others deal with this issue in this context. The government action trigger can also apply when the civil authority action is taken to enable the civil authority to have unimpeded access to the damaged property. And one argument that might be raised is that, that's not happening here. There's not damaged property to which the civil authority needs to have unimpeded access. But at the same time, the government action is in essence claiming, by virtue of restricting access, exclusive and unimpeded access to all restaurant premises statewide, except for from the takeout standpoint, in order to prevent damage and harm. So, whether that is deemed by a court to be sufficient enough to constitute resulting from the damages or dangerous physical conditions, even though not realized but anticipated, that will be the question that the courts are going to decide. Lisa, I'm going to go to spoilage coverage unless you have something you want to add on the civil authority piece.
No, go ahead.
So many business interruption policies also have coverage for spoilage of product. That most likely doesn't apply here because typically under the policy language, that is triggered in an instance where the product is spoiled because of a breakdown, electrical or mechanical, of the refrigeration equipment, or it can also be triggered when the product, the food product, spoils because of contamination of the food itself. An example would be like an E. coli contamination. So generally speaking, it doesn't appear as though the spoilage coverage provisions would be triggered by coronavirus. Now, the issue of contingent business interruption insurance, that is a type of coverage that's available to a business for lost profits that result because a supplier is unable to provide supplied goods that are component part of the product due to a covered peril. And this is something that the insured needs to purchase as an additional add-on to the policy in many instances. And it's really going to have the same coverage analysis and potential blockages to coverage that we've discussed under the other analysis previously.
Okay, we mentioned a little bit ago that some state legislatures are introducing bills to require coverage for COVID-19 losses. Particular, I've seen headlines related to New Jersey, Ohio, and Massachusetts. The way, at least I understand these bills let me back up. What they're proposing is that at least small businesses get coverage for COVID-19 business interruption, and that there'll be a fund set up that the businesses, that the insurers can apply to get reimbursement, but then the fund is going to be funded, if you will, by requiring all the insurers across that write business in the state to contribute to. So in essence, it's shifting the burden of paying for COVID-19 business losses across the entire insurance industry, essentially making it a private obligation. There, in our view, significant constitutional problems with trying to introduce a law such as this, because it is in essence going back into an insurance contract, because insurance policies are contracts just like any other contract, and trying to change the terms of them retroactively to include something that arguably they didn't include before. The contracts clause in the US Constitution and the New Hampshire Constitution would prevent any type of a bill such as that. And unless the insurance industry chose to go along with it, I don't see them doing so willingly. But if they were to go along with it, thinking that, yeah, we'll be able to somehow get our losses under such a bill covered, I guess it could go forward, but I just don't see this as a viable option. So to my knowledge, and some of you may know better, I don't think a bill has been introduced in New Hampshire as of yet, but I just wanted to raise that because that's another public policy response to COVID-19 that is at least being tried in some of the jurisdictions out there. I just don't see it from a legal perspective as being able to go forward beyond a nice idea. And in fact, many people are suggesting that the real sort of public policy response to COVID-19 has been the federal government's PPP loans and disaster loans that really is in some ways public insurance for the problems being caused by COVID-19. But with that, if you determine that it's worth giving it a go because your loss is enough and maybe your policy is worded in a way that maybe gives a little traction to the idea of coverage for COVID-19, first you'd have to make a claim with your insurer, but let Jonathan walk you through how you go about filing coverage litigation, and then we'll turn to your questions.
So as Lisa said, it begins with a claim made to the insurer, and then after that, if the claim is denied, the insured would have the option of filing a declaratory judgment action, which can be filed in state or federal court. And as we note at the bottom of the slide, typically the deadline for filing that is 12 months, is a 12-month deadline. And when filing the action, the burden of proof is on the insurer, regardless of whether the insured or the insurer. An insurer could also initiate a declaratory judgment action. The insurer carries that burden the entire time on the denial of coverage position. So the insurance policy language is construed by the court based on the terms used. And if there's an undefined term, which maybe creates some confusion as to meaning, the undefined terms in the policy are read in context in light of what a more than casual reading of the policy would reveal by an ordinarily intelligent person, so not an insurance industry specialist who has expertise, but rather a reasonable ordinary person. And then the law does allow that insurance companies can limit coverage through the exclusionary language, as we've discussed with regard to the virus exclusion and similar exclusion documents. But in order for an exclusion to be effective under New Hampshire law, it needs to be clear and unambiguous, and it needs to be incapable of having two parties reasonably disagreeing as to its meaning. And when there is an ambiguity on an exclusion, it's interpreted in favor of coverage existing, and so it's construed in the insured's favor and against the insurer. One other piece that's noted on the slide is that under New Hampshire law, if the insured prevails, the insured is able to recover its reasonable attorney's fees and the costs associated with the action from the insurer. So there is a means of making the insured whole in pursuing and prevailing in the declaratory judgment action. So unless Lisa has anything else to add, we're going to open it up for general questions.
Yes, I don't have anything in particular other than to emphasize that it all depends on what's in your policy. We keep coming back to that. We wanted to give you the high points, but there may be nuances in your policy, so you have to read them closely. Let me stop this PowerPoint and you'll be able to see us and we will see what we can do to answer your questions. Okay, welcome to our home offices here. And let me get up the queue of questions. So the first one asks it says your business interruption insurance notes it excludes bacteria and viruses as a reason for business interruption. We closed business because of the declaration of the emergency. He did it because of the virus. Do you have coverage? That's essentially what we've been talking about here. The answer is we don't know definitively yet because the actions are so new. There has not been other pandemic-related cases other than in the last 30 days, those that were filed in other jurisdictions that Jonathan mentioned, like the Oceana Grill case. It's a 500-seat restaurant, so their damages are huge, making it worth fighting about. French Laundry, California, they also, I'm sure, will have a huge claim, making it worth the fight. They're advancing the idea, kind of like the New Hampshire Supreme Court's decision in the cat smell case, that just the possibility of COVID being on the surfaces in the restaurant is enough to trigger the direct physical loss, and they're going to be challenging the virus exclusion. They said, we bought an all-risk policy, and this is the type of risk that ought to be covered. Whether that prevails or not, I think it's going to bear watching these cases very, very closely, maybe even before, even if any of you were thinking maybe you would file a declaratory judgment action, maybe wait a few months and see if there is initial motion practice in these high-profile cases, because they're going to be reported in the press, I think, because everybody's going to be waiting to see what happens. The insurance companies may move to dismiss the claims because of clear policy language or summary judgment. And we'll see if, in the next 6 months, for example, the answer to these questions happens. Next question, why are you using the term rider, which would usually apply to a life policy? Wouldn't endorsement be better? Yes, I was being imprecise, and you are correct. On terms of art, I think the average person maybe uses those two terms interchangeably, but I think you're right that in a P&C policy, endorsement is probably the better term. Next,
Lisa, I'll jump ahead I'll let you review the questions. I'll jump ahead to one that asks if food has expired or it's unsellable because of an emergency order restricting access to restaurants, for example, is that covered? And that, like the first question, is very much a part of the entire analysis we've been through, and beginning with the direct physical loss inquiry, and going all the way down to the spoilage coverage that might be available. And I think it really depends. But I think I suspect the question is contemplating a scenario where there is a restaurant full of product, food that expires and spoils because of a lack of demand at the restaurant for the food. And I think that's really analyzed no differently than the loss of the business revenue at the restaurant from paying customers.
Okay. Someone asks if our insurance is headquartered in Mass, would the Mass law be applicable to our New Hampshire business if it passes? No. As a New Hampshire business, the policy written in New Hampshire would be subject to New Hampshire law, not Mass law. So unfortunately, even if the insurer for Mass businesses would be obligated to provide coverage, that wouldn't necessarily apply here unless New Hampshire jumped on board. A few of you have asked if you can have access to the slides. Absolutely. We can either work that through the chamber, or you can email me, lwade@orr-reno.com, and I'm delighted to forward it to anybody. And then I see one, our 401k safe harbor payment is due in June. Will this be covered totally or partially as part of the PPP? And if it's covered, do we prorate it? That is a question I do not know the answer to. I know that there was some discussion around the firm asking about safe harbor payments with respect to PPP, and I honestly don't remember. Jonathan, do you have any?
I don't.
That's something if the person who's asking this question, if you want to contact us directly, we can find the answer out for you. There's other folks in our firm, or actually maybe even go on the Orr Reno website. We've set up a COVID section to provide information to our clients, as well as anyone else who cares to take a look on PPP loans. And there's a lot of information there, but feel free to give us a direct, direct contact email, or give us a call and we will get you the answer. I think that's a very straightforward question and we should be able to get you the answer right away. Let's see if there's any more, if we have missed. I'm not seeing anything else. If other folks have questions, feel free to send those in. Any final words, Jonathan?
No, thank you all for participating in this and for your interesting questions.
Thank you, everyone, for joining today. And for everyone who attended, Lisa, I'll get those slides from you and I will email them to everyone who attended today, as well
Okay.
as a recorded copy of this webinar so that you can refer back to it. So keep your eye out for that email probably later today. Thank you all for joining. Thank you so much, Lisa and Jonathan, for sharing this information.
Our pleasure.
Yeah.